Okay, folks, welcome back. This is our weekend review for the ICT mentorship, week ending February 14th, 2020. All right, so we have a higher time frame perspective being shown here today. This is the weekly chart of the dollar index. And you can see here we've outlined this area over here. And for those individuals that have gone through the mentorship and were part of this last year, we were monitoring this volume imbalance. Okay, and volume imbalance is an area where no candle's body resides. Now there's wicks that extend here and here, but there's an absence of any candle bodies there. So that's what I call a volume imbalance. Now, a volume imbalance can also be a natural gap. So just for your notes, just make sure you include that as well. I may use that term interchangeably. It's not that I'm trying to reinvent the gap, okay? But this is unique to me, okay? You don't see this anywhere else. It's just a matter of seeing that there's a very distinct imbalance of volume in between this candle and this candle here. So while they did overlap with the wicks and tails of the respective candles here, there is an absence of any real bodies that came up and filled that area in. So that volume imbalance is what we're aiming for. Now, it's been a while since the individuals that have been with me for a length of time. If you're new, obviously this is going to be new to you, and you don't know what we are looking for back here in 2019. As you can see, with this perspective, the dollar index has been in a really tight, narrow consolidation. This type of movement in here, even if it goes up to that level and rejects and goes lower, to me, I think it bolsters a lot of confidence going forward that 2020 is going to be volatile. Okay, that's what I'm looking forward to. So we have a fair value gap in here, bullish order block that's what's extended out in here, and that was the framework why I was looking for that turn on the daily chart. So if you've looked at that and you've been seeing me show that annotation for those specific levels, it was really rooted on this weekly chart. And we have a buy side liquidity pool resting above these relative equal highs, and then back to the volume imbalance. That's what we're looking for. So 99.98 is that level. I told everyone to more or less go to their weekly chart and see what that level takes you to, and it's the volume imbalance. Okay, it's going into the daily chart. All right, so we've cleaned it up a little bit. Next level to look for on the upside is the rejection block, which is the highest up close in the swing high here. So that's the one that's noted as the next draw on liquidity. Then we have the natural old high, and then the volume imbalance level from the weekly chart, which is 99.98. Really take this in for a moment. Really study the impact that my concepts obviously give, the experience I lend to those concepts with you each week, Wednesday and on weekends. And there's a lot of folks that out there are trying to teach because they've gone through my content here or actively going through it, and they're trying to repackage it or assume that they figured it all out, and they thought that the big moves for this first quarter were underway. And I mentioned on Twitter that they haven't even started yet, and this was that move here. Really big protraction on the upside. And we're going to be monitoring this going forward. When we did get through here on the SIBI, sell side imbalance, buy side inefficiency, it went through there, spent a little time, created an order block inside the SIBI. See the down close candle here. And then on Thursday, we traded down into it, and then we had another expansion on the upside. So study that on your own charts. I don't have that within this presentation. I left that for you for homework. Moving on into the hourly chart, you can see that we had the fair value gap in here. Price comes down to consequent encroachment, bullish order block overlap, beautiful reaction there. And then look what's going on here. Price is finding support at the low end of that daily SIBI. So remember, go back and look at the previous levels on the daily chart, and you want to make sure that for the purpose of note taking and studying, when I have the levels on the higher time frame charts, make a notation as to what they are. So when I drop down to these lower time frames, I'm not going to litter my charts up, because invariably they're going to get shared with somebody in here with those individuals that have no couth and no class and are violating the terms of use, what they think on the sly. So I'm not going to annotate the charts for everyone to have their own little minor mentorships, but you're going to be taking the levels I have from the higher time frame and following them down to lower time frame, top down, and you'll see what the reactions are and the significance of it. But here's the low end of that daily SIBI financial support, trading back into the fair value gap here, here, and here. One more time, touching it here with the order blocks open. Beautiful overlap on that. Then you get the expansion on the upside. This is all signatures. These are the things I found in 1990s. Okay, when I was going through price action, I was looking for things that were completely isolated, okay, or detached from the things I was learning from books and supposed educators. None of them were teaching me anything except for looking for things that don't have validity. There's no consistency. And the notion that classic support and resistance is all you need really proved untrue, because I lost fortunes trying to do that. And what I wanted to determine was what makes a level real support or real resistance, and when would I expect these levels to be breached. Okay, and that was one of the things I set out for in my pursuits of understanding what price should do. And one of the things that I basically discovered in my own studies was the concept of the fair value gap. So when we see these levels and we extend them out in time, they will act as real support and resistance. I want you to really pay attention to the lows in here. Okay, look at the lows. See the bodies? Look where all the bodies stop, right at the top of that BISI. Okay, here's the candle here. This right here, again, this is a signature that proves beyond the shadow of a doubt that these markets are absolutely algorithmically delivered. They're not based on some supply and demand factors. They're not based on some kind of bullish or bearish scenario based on buying and selling pressure. Okay, the markets are designed to deliver this way. Okay, and when you take a step back and get out of your own way, okay, and out of your own preconceived notions and team mentality, and that goes for everyone here that really is like 110% behind me and you like to champion me in the public. I don't need you to do that. Okay, I rally you. I don't need any more confidence. I already have enough of it. But you need to see these things and really take it in. Take a step back and say, okay, the things that I teach, they keep repeating over and over and over again. And you see me execute on them weekly. I give you examples where I use it. And one of the questions I got from one of the members that has been plagued with lack of consistency and frustration, I went into this video for this weekend's production to kind of like put bullet points on specific things. And you're not going to avoid taking a loss. You're not going to avoid being wrong about certain things. Okay, they're going to be basically generic things that lead to uncertainty as it relates to the markets or a particular market. And last week I got something wrong, and I'll cover that when we get to cable. But the point is the things that I teach repeat so often and so frequently and so precisely that it really is a waste of time to try to talk negatively about your inability to do this, because you're all learning. There's no reason why any of you should have any kind of doubt, any kind of depression, okay, or impatience. And I know some of you have been at this for a while, but remember, okay, remember, I created all this stuff, okay. I'm the author and basically the developer, if you will, of these concepts. Okay, so I articulate what took me 6 years to figure out. Now, just because you're learning right from me doesn't circumvent the need to take the whatever required path that you'll need in terms of time. That's all going to be unique to each one of you. Okay, so just you need to learn to enjoy this process, because if you don't, you're just going to go nuts, because it's not a simple, here's what it looks like every single time, every single day it's going to look just like this. That you need to let go of that right now. If you think that's just not trading. That's not how analysis is going to be, because there are specific variables that are going to occur, but there's a list of things that we look for, and by specific criteria, you'll know what to look for by the structure that's in play, okay, and what the direction of the bias is for that particular market, what session, what characteristics overlap for those specific conditions. All these things are going to be learned over time. You're not going to get this by watching a couple videos or going to this month content and saying, okay, I've learned enough, I know what I'm looking for, because you're not. You're not going to be able to do it. It isn't complete that way, okay? The charter membership is still going through the process of fleshing out these trading plans, which the trading plan for model number 2 will be next Saturday. This is my anniversary weekend, so I'm not doing it. So like I said, the agreement terms can change. So I'm making a slight variance in the delivery because of my holiday, and my wife has reminded me before this video not to get too talkative, but I'm already doing that, aren't I? So if she's in the room, if she was rather, she would be giving me the old hairy eye. So going back to dollar, we're looking at the respect of the top of the SIBI, and price comes down into that, closes its fair value gap as well over here, and then price rallies again, creates a fair value gap as well, comes down, overlaps with the bullish order block. That's the order blocks that I like. Okay, if you're new, which order block is the right one do I buy? Well, that's how I look for it. An overlapping of a imbalance, which shows that the market has spooled aggressively away from a particular price. That means when it does that, we are anticipating price to come back either as an immediate rebalance or a deferred rebalance, and it does both here. But back to the previous lowest down close candle, we use the open to the high. That's your sweet spot. We don't like to see it trade through the mean threshold, which is the middle of the body. Okay, so there's your qualification. You guys and new gals just got in here. You just learned how to pick up proper order block. You got lots to learn. There's a lot more to it than that. But anyway, price expands, blows through the relative equal highs, drifts higher, and then comes back down into an area of balanced price range. What does that mean? We went back and forth multiple times in here, even with this range down. All of this time in here we spent back and forth, back and forth. When price does that, that to me is a balanced price range. Now it can happen inside of 2 candles, one up and one down immediately. That range now becomes a balanced price range. When you have that, the likelihood of the market moving beyond that range and plowing higher or plowing lower after going through it is to me very unlikely. Okay, and I trust that level or that range to support price or provide resistance. In this case, we're looking at the dollar index, and it came down to that on Friday, found some support there, and then we're meandering around sideways. Now, this type of price action, it just looks like it wants to go higher. To me, it certainly looks like it wants to reach for that weekly 99.98, which is a full dollar in my opinion, because I think if it goes there, it's going to just punch to 1.00 or a full greenback. So that's what we're looking for, continuation on the upside for the dollar. All right, moving into the 15-minute time frame, you can see I want to talk a little bit about profiles, and you'll learn these specific profiles when you get deeper into the core content. But when we go into short-term trading, that module, and off the top of my head, I don't recall what month that is, but it's okay. You'll get to it when you get to it. I teach weekly profiles and how to determine or anticipate what that weekly profile may be. And if you understand that, then you can work with the price structure that's given to you on Monday, Tuesday, and Wednesday. And so here we have Friday trading, Thursday, Wednesday, Tuesday, and Monday. Monday, have opening gap, trade down, consolidation, expansion on the upside, consequent encroachment to the middle of the BISI, buy side imbalance, sell side inefficiency. Price rallies again, consolidates, equal highs. We pop through it on Tuesday, come all the way back down into that same fair value gap. Okay, so inside the fair value gap again on Tuesday, or meandering again on Wednesday. So what's going on here from Monday all the way up to the New York session on Wednesday? It's consolidating, but where is the market leading us? It wants to go higher. lots of energy on the upside. Only had one real correction on Tuesday. But what have we been saying, or what have I been outlining for the dollar on the daily chart? When we get together on the midweek Wednesday review and on the weekends, what have I been calling for the dollar? The daily bias should be what? Bullish. Does that mean every single day is going to be an up-close candle? Absolutely not. It means that your focus should be primarily on looking for opportunities to go long or look for opportunities to see continuation of open positions that you may have. So, because Monday and Tuesday and Wednesday we're consolidating, that means the largest portion of the move is going to occur on the latter portion of the week, Thursday or Friday. And we have Wednesday continuation on New York, nice big movement here. We have an imbalance, and again, top of that imbalance on the daily chart, the fair value gap, price trades down to that again. And then what do we get? Another expansion on the upside, a lot of momentum. Price comes back down, retraces back into a fair value gap, bullish order block, and then rallies again. Fair value gap, price comes back down to it, and bullish order block, rallies again. Even though all this price action here is sloppy, it's still following protocol. And then ultimately where we're at now. So we have relative equal lows here on Friday. We drop down into that, closing in imbalance here and bullish order block. Imbalance here, fair value gap, rebounds to bullish order block, and then expands. So we're looking for a continuation on the upside. Again, 99.98 is what I have my eyes set on. I'd like to see it gap up higher on Sunday's opening, come down, fill it, catapult, and then send it up to that 99.98 going into preferably by Wednesday. I would like to see that, but I'm demanding a lot. Okay, it means that there'd be a lot of fire in this dollar index, and I just don't see that happening. Right away from Monday and Tuesday. I think it probably would require it by Wednesday. If it doesn't, it doesn't change the fact that I'm bullish on dollar. It just means that I would prefer it to create a large range expansion, because I think that's what's occurring. We're getting close to the overall targets on this first quarter move, and if it hasn't already petered out, I think that we're at that stage where the blow-off move, okay, where we have capitulations where it's just everybody's in on it, okay? It's just like, it just takes off, and then it lasts a little bit of wherever it's going. It does it real quick. That's what I'm anticipating. So what took so long here to grind higher, to get to 99.98, I think it would be beneficial for it to be in large daily candles. So I guess that makes it a little bit easier to understand what I was saying. All right, so euro dollar. Here we have the weekly chart on euro. Now, for those, again, that were with me all last year, you know that we were looking at these gaps down here. And we got down to the top of the BISI on this one here. We still have the low on that BISI in the form of this candle. So that's what that next blue line is at 108.32 pipette. And then we have the fair value gap here as well. So you have to be cautious, because we're looking at this weekly bullish order block, and we can get a lot of give and take back and forth, back and forth. That's why I'm anticipating a big run just to complete it and wash it all out, because everybody is now looking at euro dollar, and the fund liquidity that would be relative to these specific points over here, they're still the target. And to reach down there for fair value, it doesn't mean we're going to go down there and then go all the way up to 118 or 120. I'm not suggesting anything like that at all. I'm just saying that the draw is still based on the premise that I've outlined here in 2019. We're just finally now getting to it. So again, the benefit for you all that are new, okay, I'm going to cover some things in the end of this video, what you should be doing that I don't do in the videos for you. But I want to remind everyone the real simple thing, because I'm looking at my notes and I have folks that are joining, and you're looking at videos when you sign on, and I talk about how we get into the demo account and using MT4. I don't obviously use MT4 anymore since they've exposed how people can use it to scam people. Obviously, all of you know that I can call these things before it happens, so that's not the point. But I don't want to deal with these goobers online to assume that that's what I do to be right. And we've moved away from MT4 to TradingView. So to answer your question, I believe that you should track me through the TradingView, because everybody's chart will be absolutely the same. My high will be your high, your low will be my low. Everything will match because you're going to be using Forex.com's data, which is what you see up here. Okay, Forex.com. Whenever I use the euro dollar or any pair I'm talking about, it's going to be with the Forex.com. It gives you like Oanda, and it gives you two other different brokers feeds, but I'm electing to use Forex.com. Okay, so it's going to be a distraction, and you're going to give me 1,000 different emails, every week if you don't listen to me, because you're going to be trying to look at things in MT4, and it's not going to have the candle's opening price matching up with what I show on TradingView. That's going to happen. To avoid all of that, all of our focus needs to be on the same thing. So just use TradingView, okay? All right, and I forgot the gentleman's name that asked me about that, but there's your reply. I won't be doing it in email, okay? So anyway, moving on to the daily chart for euro dollar. All right, so we can see a really nice drop off on euro. We were looking for that heaviness to occur. We had multiple passes trying to go higher, running buy-side liquidity, higher dollar, weaker foreign currency. Euro dollar certainly is bending the knee to the greenback. We're looking at 107.75 as the next drawdown on liquidity. If we get below that on any kind of real capitulation, again, 106.77 and 7 pipettes. Now, I'm not demanding that specific price level. If it gets to 107 big figure, drops down to 106.80, that's enough for me. I'm not going to be beating the bear drum too hard if it gets down to that level. But right now where we're at, it just looks, and I'm anticipating just a big, huge run of daily candles, because it's everybody sees what's going on now. Okay, everyone sees it. Does it require us to retrade back up into this old low here and mitigate that? Okay, so in other words, any longs that were used here to offer the liquidity. And let me say this very clearly, because too many people on Twitter, too many people on Instagram, too many people on YouTube, too many people out there trying to create their own mentorships. They're saying, okay, the smart money, the banks buy it up here and push price up. That's not what goes on, folks. That's not what goes on. They're not buying and pushing price up. Okay. The offering that price is being delivered to here allows banks to trade there. It does not matter how many traders, banks, institutions, whatever, are trying to sell this particular currency. That's not making this price go down. It doesn't work like that. It isn't, I'm gonna go out there and sell $2.5 billion of euro dollar. And the common misnomer is that you got to go out there and find trader or traders to match up with that $2.5 billion. That's not how the markets work. Okay. The central banks are the natural storehouse. They're the seller. They're always offering the liquidity. They may not willingly take on that risk. And if they can find counterparties, okay, then they will. But they're not in the business of taking traders and saying, okay, he's trying to buy it at this price. I got to find someone that wants to sell at that price too. If you believe that's going on in the foreign exchange market, you're completely asleep. It doesn't work that way. Price is algorithmically delivered. That means price is going up and down whether there's a buyer or seller at that price. Let me say that again. Whether there's a buyer or seller at that price or not. Okay? The algorithm is facilitating the opportunity for smart money. And now when I say smart money, I'm not talking about Goldman Sachs. Okay? I'm not talking about UBS. I'm not talking about Citi. Okay? Those individuals, they have their own models. They're completely isolated and distinct from the central bank. I'm speaking from the central bank level. These prices are delivered artificially, let's say it that way. Okay? They're going there to allow a different category of trader that you never hear about. You never see them. They're not writing articles. They're not writing books. They're not making courses. They don't work at these high-end banks that are directly beneath a central bank, like a big, large institutional bank like a UBS or Credit Suisse or Citi. Okay, that's your top tier, lower level, top tier bank. Above that is central bank. So I'm telling you that when we hear other people talk about how the buyers are really pushing price up, that's not going on, folks. That's not what this is. Okay. If it was like that, we would have a whole lot more randomness in price. But it's not random, is it? It's very, very specific, very to the pip, to the point, to the very narrative that I teach. So either I'm the luckiest person in the world, or I have ESP, and I don't believe in either thing, or it's the truth. And I leave that to my students to figure out what it is, because I don't care whether you believe it or not. I know it works. I know it's how I do it, and I know where I came from. So anyway, does it need to go back up to this low here and mitigate all of this run up, all of the longs that the banks would offer liquidity for? They may be underwater here. So if it goes back up to that point, they will be allowed to offset that and then drop it down. Now, what did I just teach you? The central bank that offers liquidity, okay, they may be offering liquidity to these lower level but top tier banks like Credit Suisse, UBS, Citi. They may have bought in here. Okay, so to put it in terms like this, UBS buys here, and they've been profitable all this time. Okay, maybe they have a large model, or maybe it's a large institutional trader that has bought down here, and the central bank has offered that liquidity. It's sold to that entity all the way back here. And you're thinking, man, that's a long time. Yeah, they're not day traders. They're not in there trying to make a decision on every 5-minute candle. They have a long-term time horizon. Okay, so with that said, that liquidity that has been offered here, the central bank is underwater until we get to where we're at here. Okay, so they offered liquidity as a counterparty to a large entity. Okay, now that may be a cumulative effect of large entities coming together, or smaller intermediate term level volume that comes in, but the central bank itself takes the other side of that and takes on that risk. All of this time, the central bank has been underwater until now. So when price comes up to here, in that level here, if it does, it may not do it, but if it does, they will be able to go flat, and or if my assumptions are correct, and this is where we're going, and we don't go there before going back up to this low, they can mitigate and add more. Now, what do I mean by mitigate? What are they mitigating? What about the folks that went short here? They offered the liquidity to do what? Buy it. Okay? That liquidity is now underwater over here. See, you can't grasp this because you're thinking this is a long-term daily chart. You don't trade that way, so therefore nobody else would. And that's not true. That's absolutely not true. So there's a paradigm shift that needs to take place, and that's what I teach as a market efficiency paradigm, where what you believe is going on in the price and what goes on in the marketplace is absolutely 180 degrees diametrically opposed to what your common beliefs are. They're misaligned in the grossest of terms. You can't get any further from the truth than what you're taught in retail. So when we have these points, okay, that I keep beating over your head, telling you over and over and over again, it's imperative that you understand that you have to release all those things that you've been taught to believe, because they're not true. Okay, so I expect large ranges on the downside. Otherwise, we're going to return back to this down close candle here and then mitigate. And then we'll see what we get at that point. Moving on into the hourly chart for euro dollar. You can see the fair value gaps in here. Okay, price moving up into that. And I mentioned this in the week review on Wednesday. I was expecting a little bit more of a push through there. Otherwise, it's still fulfilled as I outlined on Wednesday, but I was not able to do anything with it myself. Then we have a fair value gap here. Thursday trades up into that. Beautifully nice distribution. Trades down into the lower level objective that I outlined. Again, this is what I'm talking about, that 108,393 level. If you were looking on that weekly and daily chart, you'll know what that level is. But now down here, it doesn't mean anything to you. It's like you probably, unless I'm mentioning it now, obviously, but had I not mentioned it, you wouldn't pay any attention to it at all. You're looking at the boxes. This distribution level here drops aggressively down into that weekly objective. Okay, so this is a target, and you can see them working that in here. Now, what I want to see is a willingness to go lower. What makes it problematic is if we trade above Thursday's high. Then we go into the possibility of retrading back up into that daily old low and then mitigate. Okay, so that's what I'm looking for here. And it's moving into a 15-minute time frame. A little bit more detail. I'm only doing this because I'm teaching the idea of what you're supposed to be doing. So if you're new, these are all the things that you're supposed to have on your charts that I'm not doing for you. Okay, this is not hold your hand 100% mentorship. Okay, I tell you what to do in the lessons, and then you're supposed to be doing these very things. By doing this and annotating your chart and conditioning yourself to see how it happened so many times in the past, what's the so many times? However long it takes for you to get it, because all of us are going to be different. Okay, but I promise you, this is the only way you're going to get it, because you just can't binge watch ICT. As much as I love to talk, as I love teaching, that doesn't do it for you. Okay, you have to get in the charts yourself and annotate them. Develop your own flair and your own style for annotating them. Okay, you may like specific colors or annotating them in a particular way. This is the way I would do it. If it was me running a journal like this is how I would do it. My personal journals, I just do a scribble line. Okay, it looks like a line chart, and near the top, I'll just write a fair value gap, and I'll put the price high and low that makes the SIBI or BISI in here. And like I said, they wouldn't mean anything to anyone else but me. I know what I'm annotating in these journals, and your journals are going to be completely unique to you. And when you're done learning what you're learning here, and you reach that moment where your specific trading model is fleshed out, you know what you're looking for, you understand yourself, you've removed and replaced all of the self-defeating characteristics and habits that you have. When that's happened, you will be holding in your hands the world's most important resource to you as a trader, and the best trading book on the planet for you, because it's going to be written by you with your own experiences. Using these concepts, you have molded yourself into an independent thinking, profitable trader. But that's going to take time to get there, and you have to write that book. I'm not writing it for you. You are. And what you're doing is you're creating all these experiences, and each one makes a deposit into your understanding and in your psyche. And when you see price unfolding live in the charts, things will jump off and say, oh, I remember seeing this before. This looks like that one time of 1,000 other instances I took and taken notes with and annotated my charts. I'm seeing it now. It should play out. And then boom, it happens. And all of a sudden you start having these epiphanies and these moments of astonishment where it fuels and drives you more to study and make. The more time you spend in this stage, even when you're still learning, okay, it ain't just when you're new. You do this all the time. Charter members should be doing this too. The more time you spend annotating old data, okay, because think about it. That's what retail is expecting you to do. Look at data that's been annotated with nonsense and lipstick and head and shoulders and bull flags and such and trend lines. All that stuff is supposed to make you a better trader, but yet the statistics teach otherwise. They're reinforcing the fact that they have been mistaught. They have been misguided. They have been led astray and taken down the primrose lane, as my grandfather would say. Okay, so with this chart, and I try not to do a whole lot of this because I said this is the part you're supposed to be doing every single time the market closes for that day, whether you are able to watch it live or if you have to come home from work and go through your business of being a parent or a spouse or whatever. Once you get your time to do this, you want to spend as much of that time annotating and making specific annotations about what you see in price. Okay, and again, I'll just go over it briefly. Euro dollar consolidating Wednesday, Thursday, and Friday. Tuesday's low, we run through that, and now notice this low here. Okay, the reason why the eyeball is here is just a reminder for me to talk about this one. Everyone that understands breakers or believes they understand breakers, because I'm not done talking about them either. This low here, they would expect rather see price up to that level and then sell off. Okay, the reason why that's not going to happen, and it's unlikely to happen, and this is something you want to have in your notes. If you ever see the low over here that's lower than what would otherwise be seen as a breaker. Okay, this low, if it's accompanied with a fair value gap, as we have here, below a higher breaker, the higher breaker will not be traded to. Okay, rewind the video. If you missed it, I just gave you gold. So we have a fair value gap trading back up into this mitigation, ICT bearish breaker. Fair value gap multiple times. I mean, several, like an hour. There's been opportunities in here. Look at the bodies of the candles respecting the fair value gap low, the SIBI. All the bodies staying right below this candle's high. Beautiful, beautiful signature. And then poof, breaks. Fair value gap inside of a fair value gap. Price comes up, closes that in multiple times to stay in here. What's going on here? Is it an imbalance of buying and selling? Or is it a balance of buying and selling? Or is there just no buying and selling? It's the algorithm staying at a level, allowing the traders to put on their trade. And then it reprices. It doesn't, oh, it's more sellers coming in. Or it's a lack of buyers coming in. No. It's 100% manipulated. These fair value gaps, okay, they are billboards. Okay, that's kind of like the analogy I saw in them when I discovered them in my price action studies in the 90s. The idea is that when I look at price, I want to know what direction is price likely to be moving from a long-term perspective. Now that may be upset on an intermediate term basis or a short-term basis, okay, and that's fine, but I want to be trading with a long-term directional bias behind me. And that reason is because the large funds have a lot of money to be put in the marketplace, and the central banks will be giving them the liquidity to do that. And as long as that handshake is occurring, that long-term premise will remain in a force, in motion, if you will. So if I can determine a higher time frame bias or directional bias, then I want to look for breaks in that delivery. And the way that break occurs is here, okay, when we have a fair value gap. That means there's such a degree of movement that the algorithm will want to go back and rebalance that, okay? And the elite, the folks that don't make courses, that don't go on CNBC, that don't work at these top tier banks, they're above them, okay? They wait for these instances here. That's why all these instances have the biggest moves. It's not because they all got in and they sold a lot of it, okay? That's not what's going on. Price is being held there to allow the traders that know what I'm teaching you to get on board, and then it'll reprice lower. And then only then the release portion of that move to the level of that weekly fair value gap down here. This is your distribution cycle. All of this is your framework. So you could basically, you need to be able to see this as the setup here. When price gets there, okay, sell short. If it's the right time of day, well, that's London. So, or towards the end of London. So that's the right time of day. And what's it going to be doing? Expanding lower. Why? Because the higher time frame suggested lower euro and higher dollar. And the distribution down to what? That weekly level that we've been talking about since 2019. Price reaches into that here, and then look at how many times it spends bouncing on that, consolidating around that. All of this price action is based around that weekly level I gave you. So you want to have all your annotations here, your fair value gaps and such. And when you have that, when you have it, and you review it on the weekend, not just watch my weekend video. You want to have some time with yourself and reflect on every one of your daily logs. Okay, you want to print out like you'll see in my charts later at the end of this video. I zoom in on this one particular day on a 5-minute chart. You want to do that, okay, and you want to have that on each individual day, and then also take those pieces and look at them with a comprehensive approach to the entire week and see how these pieces fit together. Because this is how I did it. I figured out all this stuff by taking these fractals of intraday price action and putting them together with higher time frame intraday and into daily, into weekly, and how they all fit together like a cog in a greater machine, a bigger machine. Each one has its designed intended purpose to do something, and it may be a very small facet of the overall process, but without it, it all falls apart. And it's important that you understand that that small little piece on that 5-minute chart is crucial to all these things fitting together. Whether you want to trade a 5-minute chart or not, it's there because it needs to be there. Moving on into cable. This pair is going to be rather brief because I mentioned it last week. It's just acting really strange, and it has a lot to do with the Brexit, obviously. But these are the levels I'm looking at, and basically the framework. Old high being taken, old low being taken, and basically in the middle, consolidating. And honestly, I can make the case for both sides still. And I'm not convinced of one side over the other, so I'm not holding any bias right now. If you were to ask me, what should it do? It should drop. The dollar should go higher, and this pair should drop. But it's resisting that. Okay, if you look at the price action relative to the dollar and cable, they both were going up this week. And as soon as you see that type of thing, you need to be careful. Really, really careful. Especially with the climate that we have right now globally. The coronavirus thing going on. All the I mean, the list could go on and on and on. I could turn this really easily into a SoundCloud video. I'm trying not to. There's so many things on the horizon that are causing concern. And that's what I meant by the tweet on my Twitter, where I said, be careful because there's black swans in the pond with us. A black swan is an event that comes out of nowhere, okay, and basically disrupts and messes up the markets, okay, and that's unfortunately what happens sometimes. And this is the kind of climate they usually occur in, and you have to be really, really careful. Just be mindful, okay, especially with this particular currency. On the daily chart, all right, so we have this level in here. This has my attention. If we get the higher dollar and the British pound does bend its knee, go lower, I'm looking for this level down here. It may do so in very stunning fashion if it does it. I don't think it's going to be a slow drift lower like the euro dollar has been. I think it'll be like, okay, it's time to get down here and get, basically sorted. What changes that? Okay, and this is where I got to be very careful how I say this, because I am not the kind of guy or teacher or mentor or trader that likes to cover his rear end by having a plan B scenario. I'm not telling you it's going to do this, and then, or it could do this, and then when Wednesday comes, I'll say, see, I was right, like did this. That's 50-50. I don't do that, okay? So what I'm saying to you is this. I believe personally that the dollar should go higher. As a direct default of the dollar going higher, the British pound should go lower. Now, if that scenario does in fact come true, and it does trade lower, I think it should trade aggressively lower and ultimately reach for this level down here. Okay? What changes that? This high being taken out to the upside. If this high is taken out to the upside, that's going to be very problematic for the dollar. So it will take this, the wind, if you will, out of the sails of the bullish dollar. Doesn't mean it's going to crash the dollar. It just means that dollar, like, okay, what's going on here? And this would be extremely bullish on GBP if it does this. Okay. Here is the hourly chart, and I think, if I'm not mistaken, when I wrote this, I believe I said this. If I didn't, then disregard, but I'm quite certain I made a mention about this area in here, saying I don't think it needs to get up in there and rebalance that. It ended up doing that, so I was wrong. I was wrong. If it's true, I didn't get the time because I've been basically courting my wife the last day or so. The level of buying in here, okay, all of this movement here, I was not expecting that. Okay, and if I didn't say anything, which I'm almost certain I did say something about this area here in the videos from last week, I completely was not expecting this type of movement here. So like I said, I got a 98% running tally. It's not 100%, and this is one of those instances. where I was mentioning, or at least this moment here. If I didn't say it to you, I did say it to my son. Let's say it that way. I just remember talking about this area here. And if I didn't say it in the video, just know that I did say it to my son. That I didn't think this area was going to needed to be rebalanced, and it just rammed right up into it. So whether I did it with you guys or whether I did it with my son, I know I'm wrong there. So I'm not always right. And some of the things that comes by way of me getting it wrong is, in this instance, I'm glad that I was wrong, because it reconfirms when I'm apprehensive to trade a particular currency, especially the love of my life in Forex is GBP. Okay. Cable is like my pair. But ever since this whole Brexit thing has happened, we've had a love-hate relationship. And I know I didn't go out there and say last week, let's get in there, we're going to trade cable. My whole demeanor with cable has been just be careful with it. It's being heavily manipulated, and you can see it here. It's just really being thrown around. And if you look at the euro pound, which I am not covering in this presentation, but I'll leave it for you as a homework assignment, go into your euro pound daily, hourly, and 15-minute time frame and study this area in here, and it'll give you a little bit more context of what they were doing. Admittedly, I was not expecting that, so just let you know that I was wrong in that instance. But looking at it, and this is still what you should be doing. In my own notes, this kind of looks like what I have in my own journal, but again, I just draw with a pen. I don't use bar charts or anything like that, or candles. I draw a squiggly line basically representing what you see here, and then in here I write down the prices of it. Now, I'm not saying that so you go and do it, because it's going to be a problem for you. Okay, you need to know the things that are occurring in this candlestick chart, because it's going to be a development factor that you need to, use and utilize. I don't need that anymore, but you do. So when we use the candlesticks, like we have the fair value gap in here, it comes down and rebalances that as well. Bullish order block, price rallies up. Imbalance, fair value gap that's not annotated here, bullish order block, there you go, you buy that one, boom. So all of this in here completely, I was not expecting that. Creates a fair value gap again in the form of a BISI, buy side imbalance, sell side inefficiency. This candle's low, this candle's high. There's your imbalance, consequent encroachments in the middle, extend it out in time, boom. That's where we're sitting. Now, this kind of looks a little bit like the dollar, which again, I'm favoring the strength in the dollar and avoiding trading the cable. There is your algorithm theory in play there. If I see a bullish scenario in dollar and also a bullish scenario in cable, which one am I going to elect to go with? I'm going to say the dollar, because Brexit is still a factor on this currency, and that's an uncertainty for me. So I'm going to take the risk out of this and say I'm not going to trade the cable, and I'm going to be still net long dollar, but I won't trade cable. So I will elect to trade euro dollar, Aussie dollar, dollar CAD. Okay, and I'll diversify my risk by doing that versus saying, okay, I'm going to arm wrestle and impose my will on cable. Because if I'm bullish dollar, then it's going to be a sell in cable. No, as you've seen this week, cable can say, basically up yours, buddy, and do whatever it wants. And that's classic cable. I mean, it's really always been that way. Back in the 90s when I was trading the futures contract, it would just do stupid stuff like that too. And that's the way it is. So, but it creates these opportunities where this could potentially turn the corner. And if it does, we'll be waiting for a specific thing. And when I see it, I'll draw your attention to it, and then I'll try to go short on it. But right now, it's hands off for me. All right, so 15-minute time frame on British pound. The same fair value gap in here. So really, there's a whole lot more to say that's not been already said on the hourly chart. We have small little fair value gap that we trade into right here for this pop up. Relative equal highs. We could probably see it jump up, ram into that 3084. It doesn't necessarily have to get that far, but we could wipe this out and then trade like I wanted to see it do on that higher time frame chart on the daily, on that lower level fair value gap. So we'll see what we get this week for a pound. For right now, it's hands off. All right, just a brief summary. I'm not going to be posting individual charts because of time constraints this week in my personal life. So I'm basically encapsulating the entire week here. I know I have a thread that I've been posting charts on. I'll resume that next week, but right now I have to have time for my wife, and my son's birthday was yesterday too, so I have to do things with him. And I already got the hairy eye given to me that I've spent more time in this video than I should have, but she knows who butters her bread. So ladies, don't hate me. I'm just trying to be funny. All right, so looking at the Monday's trading, we had run above Friday's high. Monday, Tuesday, Wednesday, Thursday, Friday's trading. Monday runs a higher high than Friday's previous high, and we have sell-side liquidity resting below here. And I want you to take a look at this higher high here, because when we look at the S&P, we're going to see that there's a divergence there. We should see a lower low in the S&P market relative to that, and you're not going to see that. We have a fair value gap here as we have displacement lower. The market will want to go back and seek the refill in that, and it does. Trades down, blows out the sell side liquidity. Then we have a divergence here, which we'll see in the S&P. Market has a displacement on the upside, fair value gap, bullish order block, trades down to it, boom, hits it, and then runs right back up to, again, the fair value gap. Hits it here, hits it here. Do you think they respect and remember these gaps? Of course they do. So you're saying that the bond market is also ran on an algorithm now? Yes, they all are. They're all ran like this now. So you don't need to fear this not working, okay, in the future. This is the way it works, okay? This is how it works. It's going to work like this, okay? It's always going to work like this. Always, 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 always going to work like this. They would have to completely overhaul the whole financial structure, okay? And it ain't going to happen. They got a winning system, just like casinos. They got to let people win, okay? There's so much money being taken out of these markets doing it this way. People are going to win the lottery. They don't stop making lottery tickets because people win, okay? The bottom line is, this is the edge. This is the inside track. This is behind the curtain view, okay? And when I teach this stuff, it really offends me that y'all go out there, okay, and start making videos on YouTube trying to teach something so you can feel smart about something and make yourself feel good. If you feel that little about yourself, okay, that you got to go out there and start teaching my stuff to make yourself feel significant, you're doing it wrong. You should be taking all that energy and diverting it into your study journal, because if you're making videos, you don't know it. You're pretending out there. You learn how to do this by taking all that energy and putting it into your journal and studying it and keeping it there. And then you ain't got to worry about proving it to other people to feel good. You'll be sitting fat. You'll be making bank. You'll be doing this versus trying to pretend to be the best mentor, okay, or my protege, which I don't have any. So as much as I want my sons to be, but they aren't. So there's divergence in here. We'll take a look at this one and this one on the S&P. So here we have the higher low that should have been a lower low on S&P. Friday's low, Monday's low. Divergence runs up. Okay, we have a fair value gap in here, which you'll see if you go to a daily and 1 hour chart. Again, look at the levels here and study on your own. I'm not trying to break everything down for you. I want you to take what I have here and you dig into your charts and see what this is. Okay, and I'll make mention to it throughout next week also. But for now, these are the salient points I want you to see. Fair value gap on the hourly chart, you can see it comes down, hits that again. Rallies, higher highs here. So that means should have been lower lows on the bond market. Well, let's see what happened there. No, a higher low after running sell-side liquidity on the previous Friday low. So this market is in consolidation. This is how you trade it. And again, S&P, same thing. We had a nice run on Monday, but we've basically been consolidating since. One of the things I'm concerned about is that we made higher highs in here on Thursday to Wednesday. And if you look at what was shown on the bond market, we're making higher lows. So this by itself doesn't mean much, but we're at record highs on S&P. And I'm just going to share something with you. And some of you are going to be rolling your eyes, whatever. Keep your opinion to yourself. In this place, this is my house. I can say whatever I want. And you don't have to really like it either. You don't have to agree. You don't have to subscribe to everything. But I got this overwhelming feeling, I guess you could say it, or an unction on Friday morning. I was watching S&P, and I guess if we went to that chart, it would be a little bit more meaningful. I was watching S&P in here, and I was basically thinking to myself, this coronavirus, there's so many people divided. I got an uncle that I used to live with, and he thinks it's all a masquerade to stop the protests in China. And guess what? I did too. I did think that. But I don't think that now. I believe that they released a bioweapon. Okay? And one of the reasons why I'm almost 100% sure of it now is these folks that are getting sick, okay, it's not a flu. Okay? A flu doesn't turn your lungs into broken glass. Okay? If you do scans and you look at these individuals with their lungs and they do CAT scans and such, it looks like someone took a plane of glass and shattered it. It looks like broken glass in the image where their lungs are. That's not natural. That's not normal. Okay? And the individuals also that don't die from that, they're having heart failure. It's like they're just there and they're not there. Okay? So one of the things, and there's lots of videos, okay, I posted, if you go and look on my Twitter, I posted a specific channel, and I don't want to try to be like a fear monger, because I don't believe the spirit of fear has been given to us. We're not supposed to be fearful, but we should be aware and take certain measures and precautions to try to prevent